I really don't want to be the guy that tells you that you just suck at trading. I don't like being the one that has to tell the truth when it comes to painful things like that. But that's the truth. You just suck. You suck so bad. You lose literally almost every single trade. You draw support resistance zones. You've tried using indicators. You've tried trading with the trend. You've tried market maker, order block, liquidity flow, bank manipulation strategy, and you're still not profitable. And even when you do win a trade every now and then, it just seems to be pure luck. You have no clue how you won it, and you have no clue how to duplicate it. You're just completely in the dark over here. So that is why I'm coming to you as somebody who slightly knows what they're doing to help you become a better trader, and then in turn become a better person. You can become a better person and a better trader by drawing better support resistance zones. And I'm going to teach you exactly how to do that here in this video. And all you have to do, you just have to watch the video. Let's go ahead and get started. So to make sure that you don't screw up your zones, I'm going to be teaching you literally everything right here in this video. The way that I draw support resistance zones is I base it on where price seems most likely to bounce. Keep in mind, technical analysis is just it's a complete joke. Literally, like technical analysis, all I use of it is just support and resistance zones, and then obviously price action analysis, like just looking at what the candles are doing when they get to support resistance zones. But that's literally it. Technical analysis is a joke because it is literally, it doesn't predict anything. It's just a way to control risk. You put your zone on the chart, then you say, all right, if I base my entry off this and I put my stop and my target here, if I'm hedging or doing whatever, it's just a way to control risk. Like I'll wait till the next zone to enter, or I'll add to a position if it does this and that. Nobody knows what's going to happen. You don't know what's going to happen. My win rate is like 60% to 80% depending on the week. I lose 20 to 40% of my trades depending on the week. There are literally some weeks where I lose like almost half my trades. And that's just what trading is. That happens, okay? There's also weeks where I win almost every single trade. My win rate might be in like the high 90%. But if you can just get a decent win rate, then you can be really profitable, and you can do that by just using clear support resistance zones. So let's go ahead and get started. Instead of showing you all the trades that I've taken this past week and showing you all the profits I've made and showing you like the trades that I've literally taken like today, on a couple of these pairs, I've had one partial loss, one break even, and then 3 winners today. So instead of showing you all that, and instead of showing you, Mission FX compounding and showing you how everyone's killing it here in the group chat still, and showing you how well things are going, showing you how Josh has started his trading journal and he's taken a lot of wins and this and that, instead of showing you just all this, see, I'm still showing you this. Instead of Elijah over here catching a sell at resistance. This is super simple stuff. I mean, it's just the simplest stuff that could be possibly happening. But regardless of that, what instead I'm going to show you is I'm going to show you a more practical way to do this. We're actually going to go pick a random pair, go and back test it, and I'm going to show you which zones, which trades, things like that. So let's go ahead and let's go to random.org. Let's pick a number between 1 and 10. 1. So we'll use what? Euro USD. Okay, so we'll use Euro USD. I'm actually going to trade here on this right now. We'll see what ends up happening. I don't think this is going to work out. An EU and GU, but anyway, so I'm going to trade here right now. So let's go to a different version of this pair, FXCM. That way the chart's nice and clean. Okay, and we're going to scroll back. I'd like to be able to use the what's it called? I'm going to show you guys a specific take on this. Oh man, it's going to be so juicy. Let's scroll back a random amount of time. 1 to 10, we'll scroll back to the count of 6. All right, 1, 2, 3, 4, 5, 6. All right, where are we at? We are in July of 2021. Okay, so all we're going to be doing here is we're going to be going to the 1 hour. We're not going to be drawing stupid zones like this in here, like stuff like that, where it's like, it's kind of sort of resistance, but then it kind of broke above and kind of was support, but then was support here, but then broke back below. Now we're waiting on a retest. We don't want to be drawing crap like that. We want to be drawing literally the boring, obvious stuff. The stuff like this. Or in this case, I guess it'd be these lows here. Then when you extend it, it's like this. So it was support, broke, tried to be resistance, broke back above, tested as support, and bounces. There's no real question about where the zone is right there. We don't want to be using crap like this where price slashes through the zone a million times. Like where it goes back and forth and breaks the retest and then it plays around and goes sideways. We don't want to be using any of those zones. We just want to be using the stuff that's the most clear. And it literally just involves you being patient and waiting. We can use something like this. This one's really clear as resistance multiple times. The only weird thing was that little spike past it right there. Other than that, that zone's fine. Then what do? You just wait. You literally just wait. You chill. You wait for price to get to one of these zones. So here we go. So now we have price breaking down to this zone. Now we need to see if it rejects it on the 1 hour. When price came to this zone, there was literally no sign of rejection at that zone right there. Price literally tested the zone, and then it barely had a little wick. It's just a huge bearish candle. Next candle fell through the zone. We had price push back up to this zone, retest, and then reject. So right here, whenever it retested this area with rejection, I'll typically only enter trades if it's at or close to the zone. So what we can do is we can start fine-tuning this zone just a little bit. We don't want to get it too tiny. We just want to make sure it's like reasonable. So what happens is when price comes up to the zone, it rejects it. You're then saying, okay, well, if price doesn't hold here at this zone and it comes down, it's likely to go back to the previous low, or it's likely to make a lower low. So in this case, that's exactly what happened here. Price rejected this zone, closed lower. What I will typically do whenever I'm taking my trades is I'll wait for price to return back into the zone, and I'll enter as soon as it gets into the zone, as long as it's already had rejection. If the candle had closed up there, I just would have entered that as a sell because that's close enough to the zone. The candle closed down here. This just makes it a little bit harder for you to like manage your trade and get good risk reward and stuff like that. What I'll do is typically start a small account at like 1K, 2K, 3K. I'll risk like 40% per trade to make 50% per trade. And since I have a really high win rate, I'm able to compound accounts from 1K to 10K in like usually a couple weeks, usually like 2 to 4 weeks. I have an entire course where I teach about this. It's at the link in the description. It's the Mission FX compounding course. We have limited spots that we open up, a couple per week based on how many clients we have. We've had a lot the past few weeks. I've been doing a lot of one-on-one sessions, and I need time to be able to work with everyone personally. So if you'd like to check for availability, you can click the link in the description and get more information about our compounding course, where you can learn how to compound small accounts up very quickly using a ridiculously simple support resistance trading approach, just like the one I'm showing you here. So with that being said, this candle closed here. When price comes back into the zone, I would have entered as soon as it got into the zone. Stop goes just above the zone. Target at a 1 to 1.25. We'll just leave it here at a 1 to 1.3. And we'll see what ended up happening. So this one ended up coming down, hitting the profit target. This is why I don't like taking profits past the previous lows, because if you try to take profits past the previous lows, it won't always make a lower low. So in this case, this is a winner right here. And what was it? What did we do? All we literally did was just draw a clear support resistance zone, and then we're either waiting for a bounce at that zone, or if price just falls through it and breaks below it, you're just looking for a bounce of resistance. So it turns into a break and retest of resistance instead of a bounce as support. You're just looking for price to bounce off the support resistance zones. It's really not complicated. So now what we'll do is we'll go a little bit forward. Also, what we might want to do is adjust right here to where price is bouncing. So now I think it'd be safer if we use that zone right there to trade off of. It's good this trade worked out, but we want to be only sticking to the stuff that's the most clear. So for now, it looks like this zone seems to be where price is bouncing. There was a bounce here, support, and now there's a bounce here. So we'll use that zone going forward. So price goes up. We did go up to resistance here where we formed. So price was forming a resistance right here. Let's see if price can go up there and bounce again. Okay, so we came back here into this support zone. So let's, I clicked a little bit too fast, but let's go back to see if there was an entry. So we're gonna go candle by candle. Price reached the zone, started to bounce. Price hit the zone again, started to bounce, but the price was already up here. So in this case, we'd have to wait for it to return back to the zone. Since it hit the zone and bounced, it's a fine trade. It's probably gonna bounce here, but there's no good entry. We need to make sure that we're entering like close to, like at the zones. If you're entering at the major zones, it's so much easier to trade. So price took off, came back into the zone. This one would have already run to the profit target initially, so there's no trade here. Came back. Yeah, so I mean, it is what it is. So we'll keep it going. Price broke, it's retesting this zone. This is looking pretty choppy in here. It's not really looking like it's, there's a lot of wicks on either side of the zone, so it's not too clear what's going on here in particular at this zone. Here we go. So if it would have bounced right here, that would have been a good buy, but it didn't bounce. Pushes up, rejects. Came to this resistance zone, so this is a good trade. We'll extend the thing just a little bit further up here just to include that wick. So price wicked into this zone, it rejected, and then it closed bearish. A simple trade right there since it's still close to the zone. If it had been too far down, you would wait for it to come back. Stop loss just above the zone and the wick high, and then a take profit at a 1 to 1.25 or a 1 to 1.3, just almost the same thing. So now we're back here to this support zone again. Now we'll see if we reject here. However, what we'll notice right here is that price is starting to pin below this area. So now it's like it could be down here, it could be further up. We don't want to be using any zones that look sketchy. We just want to be using the zones where it's obvious, where prices had clear balances before. Nothing where prices like fished through it too many times. So this is a good trade here. So price hit the zone, it bounced, it closed bullish. It can either close with a bullish wick or a bullish candle. You don't want to read too far into it. If it starts bouncing at the zone, cool. It may be likely to continue away from the zone. So this one has a little bit of a bounce. Reaches for the target, comes back to the entry, hits the target finally. So this one had a nice little bounce. So this one was good. We'll look for one more trade, and then we'll see. We'll go over the results. So let's see what we can find here. So another bounce here at the zone. So this it had a nice bounce away from the zone. It came all the way back. It tested it, had another bounce. If you're using the clear zones to trade off of, that would have been the rejection right there. This first candle that came into the zone right here, I'll show you here. We'll go back. This first candle that came into the zone, it technically rejected and pinned the zone, but it didn't really, like, the major chunk of the zone is like down here, right? It's where all these like wicks are coming into. You really want to be waiting for a test like into that region first. You don't want to be taking trades where it just comes like up here really high and then it starts to bounce, because then like your entry has to be way the hell up there. This is the zone and your stop has to go below that. You have to have a huge target relatively if you're going to be trading things like that. You don't really want to be doing that. You want to wait for a nice little deep test into the zone, then rejection. You want to make sure your entry is at the zone. So this first candle wicking away wasn't good. This one still isn't really that great because you have to you'd have to be entering far above the zone. You'd have to extend your target way over here. We want to get an entry like price pushes deep into the zone. It has that little liquidity press and then it rejects. So something like this is good. It pressed deep into the zone and it pushed up and it closed with a bullish wick. So your entry would have gone right there at the close of that candle, stopped just below the zone, then it targeted a 1 to 1.25. And this one pushed up to the target. I mean, I guess the target was a little bit further up, but still. So it pushed up to the target and everything was good. So anyway, this is the whole point behind trading clear zones. So let's take, for example, if you had started a small account and traded it from July 19th up until July 23rd, just on these trades on Euro USD, only trading the most clear zones, right? We're not trading any crap like this in here where it's like, it's confusing and price slices back and forth through it and it goes like every which way. We're not doing anything confusing like that. No, we're simply looking at areas where has price just obviously bounced multiple times before. All right, when we had drew this zone up in here, like, you know, this bounce happened, but it happened too quick. Otherwise we could have traded that and it never came back to give us an entry. But when it finally did come all the way back, it hit the zone and rejected. I mean, it's perfect. Like, we already had that zone marked up. We had it already. All you got to do is just set an alert at the zone and wait. Whenever we were trading this one down here, it was support twice. It broke below, turned into resistance, broke back above and found support once, came into the zone. It didn't show any respect as support, but it broke back below, came and tested as resistance and started to reject. Again, whenever we're trading zones like that, when it starts to get sloppy and it starts to look unclear, you don't want to be trading zones like that. And even then, this still kind of worked a couple times, but I don't like whenever price is like lapping through it over and over again. Or I think in the last video I made a couple months ago, I used the word like wigwag or something, or whip whap or something. When it's slicing back and forth through the zone over and over, you don't want to use it. But in any case, the win rate I think was really high for this one. Well, we won every single trade. So normally it doesn't happen like this. Normally there will be like, you know, 1 or 2 losses over the course of a couple trades. But in this case, every single trade happened to be won. Like I said, roughly 60 to 80% of the time I'll win trades. But let's do the math and let's see if you would have started a 1K account, right? Like me, I start a 1K, 3K account. The first trade, you know, you risk 40% of the small account to make 50%. You don't want to put all your money into one account when you're compounding. That's stupid. Just put like a small percentage of your capital, like 10%, 5% of your capital into an account. Or if you have really high capital, like you put even less. Like for me, I've got over like $1 million in investment capital, like 1.45 right now. So I've got a lot of money to trade with. I only start a 1K to 3K account. That's like a 0.01% of my capital or something ridiculously small. Like put a small amount of capital into an account, trade it with that. So 1K, and we'll do multiplied by, if you lose, it's minus 40%, but if you win, it's plus 50%. If you're using a 1 to 1.3 risk reward ratio, and then you calculate your lot size to risk 40% to make 50%. So the first trade we make 1.5. So that's $500 profit. You won the second trade, so it's times 1.5. We won the third trade, so it's times 1.5. We won the fourth trade, so it's times 1.5. And so you pretty much 5x the account. You took a 1K account to 5K, and all you did was draw clear support resistance zones and take trades where you're simply trading a bounce off the support resistance zone. And the only risk management structure you're doing is you're just compounding the profits. So if the first ones win, you risk 40% of the new balance to make 50% of the new balance. The new balance, after you win that trade, you risk 40% of the new account balance to make 50% gain. And then you do this, eventually you'll get a loss, so you'll lose 40%. But then after you lose 40%, like let's say you take a loss, right? So it's times 0.6. So then you're down to 3K. From here, let's say you win the next trade, so it's 1.5. So you're pretty much back close to your balance that you were the previous trade. Let's say you win the next trade, so it's times 1.5. 6,800. Let's say you lose the next trade, times 0.6 because you lose 40%, back to 4K. And then let's say you win the next two. So times 1.5 times 1.5. Now you're up here to 9,200. And the last trade, let's just say you have a frustrating day, you lose the last trade, 0.6, you're up to 5,500, but then you win the next two trades after that. So times 1.5 times 1.5. This could maybe take you 2 weeks to a month. The account's now at 12,400. So I mean, this is one pair over the course of 19th of July to 23rd of July. This is 4 trading days on one pair. I mean, there are so many ridiculous setups you can get. Literally, people in my compounding group are calling out setups after setups after setups, day after day after day, ridiculous amounts of setups. Josh has been having just literally a murder fest trading all sorts of stuff. Johnny as well. Johnny's doing amazing. And he even sometimes uses a little bit bigger risk reward ratios. It's all support resistance trading. Elijah over here took a GBP CHF sell, Euro Canadian dollar 4 hour, took a buy at the bounce right here. Dan, he took the first trade, he set it over a week. And look, it's just a simple break above resistance followed by a test as support, and it bounces. It is just the same stuff over and over and over and over and over again. And it's ridiculous how simple it is. And so if you'd like to learn how to do this as well, check out the Mission FX compounding course. The link is in the description of this video. And I will see you guys there. Hope you guys have a great rest of the day. I hope you learned something new. Make sure you hit the like button if you enjoyed this video. Cheers.